Welcome everyone, Cameron here from FXTC magazine. Just thought I'd pop in a little early and see how everyone's going. If you just want to put a comment in the comment box, just let me know whether you can hear me okay. Looks like there's a slight delay on the chat box tonight, so just try and bear with it a little bit. You can actually change your name. If you see where the little chat box is, there's a little box just above that. If you just you can put your name in. It just makes it a lot easier for me or our guest presenter tonight just to be able to rattle off some questions directly to you. And it beats me saying, welcome guest 621. How is everyone doing tonight? Got a really good presentation tonight, I've got to say. Support and resistance always been one of those things which has been somewhat difficult to, well, not difficult to get your head around, but there's just so many ways of doing it that it's, it's really good to just kind of get back to the basics every now and again, because nearly every successful strategy really comes off the back of support and resistance. So it's a really awesome presentation tonight. It's only a short one, but it's going to be a really good one. So I'll just let a few more people come into the room. Obviously, it's not due to start for another 8 minutes or so. Just wanted to check in, make sure everyone's sound is working fine. Hey, Toot, how you going? Toot or Toot? I'm guessing Toot. So just before everyone gets in, I'm not going to do the hard sell on you, but I've actually just finished, pretty much just finished the next edition of the magazine, and I'm pretty sure everyone here has heard of Matt Lococo, but man, some of the stuff he says is just incredible. So what I might do just to as a sign of good faith for those coming on the webinar tonight, don't tell anyone else, but I think what I'll do is shoot you all a copy of the next magazine. There's a little gift at the end of this webinar as well, but I might just shoot you a copy of the magazine. The guest presenter in tonight, Keith Harrington, he's actually in the magazine as well, this edition. So yeah, I'll get you all a copy of that. Eric, good evening. We've got Pippin in the house. How you going? So if you haven't done already, just click the little video button on the left-hand side there. That will actually play the live webinar. Eric, Toot, where are you guys coming in from tonight? Just put a comment in. Let me know where you're coming in from. Not a problem, Eric. Thanks, mate. Buenos Aires, Argentina. Nice. Well, Tute, I'm assuming I've got the name right. Eric from the Netherlands. Wait, I'm assuming I've got the name right, but we've got Keith Harrington, or AKA Pippin Gypsy, as people know him in the Forex community. He is in Chile, so not too far from you. I'm actually in London, and as you can imagine, it's getting close to about 11:30 at night, unfortunately. We'll just give people a few more minutes to come in. If you're active on Twitter, um, feel free to send out a quick tweet letting anyone know to join the webinar that you might have as part of that community. So it's just fxtcmagazine.com/webinar. Just put a tweet out there, just let everyone know that you're about to hit up the support and resistance webinar. All right, I'm just going to grab a drink. Now's a good time just to grab a pen, grab some paper, whatever you want to write on, because there's going to be some absolute gold coming up. So I'm just going to grab a drink of water, and then we're going to jump straight into it. So give everyone a few more minutes to get in. If you need to answer any questions, we'll get to it before we get really cracking onto it. But yeah, definitely grab yourself a pen and paper, because this is going to be some epic content here for you. I'll be back in a minute. All right, guys. Cameron here from FXTC magazine. So I'm the editor and publisher of FXTC magazine. I just want to do a quick mic check. I know we've just done one for those who are in early, but yeah, just let me know if you can hear okay. All right, let me get started. Look, I guess tonight's presentation, I wanted to bring in someone that we've just interviewed for the magazine. Now, Keith Harrington, too, or Pippin Gypsy, as he's known in the FX community, is, most people who've been around trading for a while now would know him from, his tweets, etc. But look, I wanted to bring him tonight. He's taught me a lot personally, but essentially I see him as one of the great candlestick masters out there. So he's going to show you in this presentation just a little bit about support and resistance. Now, support and resistance is one of those things where it's, I guess, the fundamental thing you need to know about trading. And if you can get support and resistance, I mean, you can literally create a trading strategy just based on support and resistance. So if you can get this down pat, then your path to being successful is going to be a lot easier. And Keith, the way he looks at it is by no means unique. It's the way a lot of people do it, but he understands it a lot better than most people and can really demonstrate it to you guys. So, so it's really honoured to have Keith in, and Keith's actually going to be running a whole series of webinars for us at FXTC magazine, and we're really looking forward to getting involved in that. So, for those who are just new to the webinar, just above the text box on your chat, you can actually change your name on there. So it just makes it a little bit easier when either myself or Keith is answering questions, rather than just saying, g'day guest 389. What you can do is you can change your name, and you can make it a little bit more personal. So we've got some good numbers in here tonight. There's an old name that I haven't spoken to before, Keith Pereira. I know that you've been a supporter of FXTC for a long time, so welcome to the webinar tonight. We've got Mike Schumann from Bogey Trades, Creighton, Arturo, Chute, of course, we've already talked to, Martin, Eric, Strike, is it the Streak? But I just wanted to give you a little bit of background for FXTC magazine. We're not going to give you the hard sell, and I've already mentioned to those that were in earlier, we've got a great new edition coming out in a couple of days that has Matt Lococo, Keith, who you're going to meet tonight, and another guy called Darren Chong out of Singapore. So I'm actually going to give you this magazine edition at no cost, and I'm just going to email it through just to say thanks for being on the webinar. But also at the end of this one, we have a great little handout, which is basically a cheat sheet for candlestick patterns, which I haven't seen before, and I've always wanted one myself, so we made it. But let me just give you, I guess, FXTC magazine background before I hand you over to Keith. But look, the journey for myself personally started about 5 years ago, and it was all about the rat race, man. I was trapped in that rat race, and I saw so many other people making it, being successful through trading, and really I just wanted to be a part of that. And like a lot of people, had no idea what I was doing, had no idea who to trust, where to turn to, what information was right, what's wrong. And essentially out of that frustration born was FXTC magazine. And it's all about making the path to success of the traders that have made it, have become successful, just finding out how they did it and what it takes to be successful. So I guess you'll have if you're not already a member of the magazine, um, you'll have an insight into that magazine in the next few days when I send it out to you guys, and you can have a look at it. And Matt Lococo, for example, gives some serious gold stuff in there that you can't help but be successful after reading some of his stuff. So our mission at FXTC Magazine is just really all about providing you with an insight into what it takes to be successful. We've got some really big guests coming up with Timothy Sykes, Rob Booker, and the list goes on. There's a whole bunch. Jared Johnson, Chris Pulver. I can go on and on with all the names that are coming out in the next editions of the magazine, but have a look at it and let us know what your thoughts are. All right, so founder of FX Brick Road is Keith Harrington, aka Piven Gypsy. So let me know in your comment box. Just let me know in your comments box whether or not you follow Keith on Twitter. I'll have to get what his Twitter handle is. Maybe when Keith jumps on board, he'll be able to tell you exactly what it is, and you can follow him because he posts most of his trades online. So if you want to follow someone that is pretty open and transparent, then definitely get behind Keith on Twitter, and he'll show you exactly how he does everything. So, all right. So basically, what are you going to learn tonight? It's all about support and resistance. And look, I think the easiest way to do this is for me to pass it over to Keith. He can run through it and let you know everything there is to know. Question-wise, you can fire the questions as you go. With the webinar software that we use, there usually is a delay of about 10 to 15 seconds. So I'm going to hang around tonight and sit inside the chat room. So I'll be able to answer any questions you come up as they do. Or if you just want to hold your questions to the end, we'll have a quick fire session at the end of the webinar where you can hammer Keith with all of your questions, and he's promised to stick around and answer all of them for you. And you can also email us. We're very transparent. We'll give you an email address, Twitter. You can contact us. I'm big on Instagram. Not big as in blowing my own trumpet. I mean big as in I love Instagram. I love being on it. So you can always hit me up questions on there as well. So without further ado, let me just try and work out how this webinar software works and get you transferred over to Keith.
Hey, Cameron, you hear me?
Are you there?
Yep, here I am. Hey, everybody.
Keith, welcome.
Go ahead, Cameron.
I am. Oh, you've got your. I noticed you put your Twitter handle up there on the question box. So thanks very much for that.
Right.
So look, I'm going to pass you off. Hopefully everyone can see. Maybe just put a comment in the box that you can see what Keith's basically got on his screen, and then I'll bid you adieu and see you in the chat room.
All right. Hello, everyone. Good evening, good afternoon, good morning, depending on where you are in the world. We're going to have a small webinar here on support and resistance. Basically, nothing too extensive, just letting you know what it is, the different ways to use it, other things like that. How many of you trade using support and resistance? Just put your answers in the comments when they come through. I'll be able to see them. What we're going to do, I see some of you have heard of me, some haven't. What we're going to do here is start off by asking, what is support? As you can see, I have it on my screen. Basically, support is an area where price has difficulty falling below. Buyers tend to enter the market at these levels. So resistance, just the opposite. The area where price has difficulty breaking above, and sellers tend to enter the market at those levels. We're going to go over here to a couple of charts and get you used to support and resistance. Here we have the euro dollar. I know this is a very common pair on the daily time frame. Basically, what I do with my support and resistance there are a few types. I can show you those again over here of support and resistance. We have horizontal support and resistance, swing support and resistance, support resistance zones, diagonal support resistance, rising and falling windows, or better known as gaps, Fibonacci levels, pivot points, round numbers, and moving averages. I prefer swing myself and zones. Occasionally I'll use horizontal, and very rarely I'll use diagonal support resistance. I use diagonal when it's in some type of a rising or falling channel, or triangle, or wedge, or things like that. But as far as daily itself, or I'm sorry, diagonal itself, I don't really use much. I'm not big on fib levels, but I know many traders who are. The same with pivot points, round numbers, and moving averages. I'm just going to show you, for those who may be new to support and resistance, we have a swing high here. Basically what I do for a swing resistance is plot it right up there on the screen. The idea of swing support and resistance is you have a candle pattern or a long wick or some type of high where price has reversed, and you wait for price to come back up to that level and test it. And on a rejection, you have a possible entry signal. If it breaks above the level and continues going, then it's invalid level, and you look for the next level. We have static support and resistance, which is just horizontal levels. This could be used something like this. You can see where, excuse me, let me put this here. We have support there, resistance, resistance, support, support. I use these every once in a while, but I do prefer, like I said, swing and zones. The zones, how I plot those are basically like this. You can use the lowest low down to the wick. You can use the wick to wick, but whatever you want to do, you just want to stay consistent. Any questions you guys have, just go ahead and put it into the box, and as they'll come, we'll try to get these answered. Ways to use support and resistance. You use support and resistance to enter the market, to exit the market, de-risk positions, take partial profits. Let's go back here to these charts. For example, you have a level here. We initiate the level here. Price reversed up, came back down, tested and rejected it. So now you would have your entry, your exit, and your possible support resistance area or zone for a potential profit target, or an area to take partial profits, or just to de-risk in general. Basically, it's not too difficult. Support resistance is very simple. I'm sorry, what's happening? I'm new to this, so. All right. So we have a few charts here. If you guys have any charts you would like to go over, please put them in the box as well, and we can plot some levels on. If you guys are looking at any pairs, looking for any potential setups or anything, we can go through that here as well. It won't take too long. Any kind of practice on support and resistance will be pretty good. Let me see if I can find something with a diagonal support and resistance level. Here, okay, we have a Aussie Kiwi chart, not diagonal, but we have a rising window or a gap. You can see we have price moving up, we retrace, move back up, retrace, and we gapped open. And how I use this is I plot from this highest point from the closing candle or the closing day to the lowest point of the opening day, and then you have a zone going all the way across the chart. And basically, you can see this has been holding as support, very good support. We came down here. We have a nice wedge down here, and we had a bullish engulfing pattern. Still confirming this level would be a nice entry, a buy entry, in my opinion. Like I said before, I use support resistance here, probably be a target. So we had a Euro CAD. This pair would be what I would use for diagonal support and resistance. And there was also, I believe, a channel here. So there are many ways to use it. The main thing you want to remember is whichever way you use, if you want to use horizontal, be consistent. If you prefer swing levels, be consistent with that. For the zones, diagonal, rising windows, falling windows, Fibonacci levels, whatever you use, just be consistent. Because you can switch up and continue to switch and it won't work, it may work. Consistency is key. It's always key. Anybody have any questions so far? Are you following me? Is it making sense to you? Let me know. And then we can continue on to more charts if you'd like. Here, this is a spot Brent crude chart where we have an example of swing resistance holding. Right there, we have a nice bearish engulfing pattern. We came back down up here and tested it again and rejected it. And we got a nice reversal off of it. And this is pretty much what I do on daily time frames, 4-hour time frames, 6-hour. I usually tend to stick to higher time frames. Here we have an example of resistance being initiated, held, and we reversed. We ran back up and we got a break above, close above. And that's the end of the resistance level. After we get a break of resistance, what I generally look for is a pullback down into this previous level to confirm as new support and to possibly get into the trend. So support and resistance can be used in counter trend and trending environments, also trends in general and ranges. Generally, the range, you have range resistance and range support. Here we had a bit of a triangle type here, but we broke out before we got any more consolidation going on. And if you look at this pair here, this is Aussie yen. You can see we have another level here, which could be used as a swing level, or you can make it into a nice little zone there and see what happens there. So basically, it's just consistent. You can see we have another level here if this previous level breaks. And this is what you look for. You look for price to hit a level, confirm it, look for an entry signal, and place your trade. It's that simple. Sometimes it works. A lot of the times it works. Sometimes it won't work, but your wins will generally be larger than your losses. And that's pretty much how it works. Not really much else to say about it. It's pretty straightforward. We can continue with the charts on this euro pound. You can see we have another swing level here, which can also be used as a zone. And this is why I use zones and swing levels, because they tend to be most consistent with most of the pairs. You can see we have some rejection up in here, looking for some type of signal to sell. Down here, we had a previous resistance level turned support. We did get a close down here, but got an immediate close back above it, which tells us that the level is still valid. And what happened? We reversed back up to resistance. What other pairs do we have over here that we can go through? Gold is a common one. We can go up to the daily chart here. You see price is up here at this swing zone. If you don't trade dailies, you can scale down the charts as well and see what time frame is more comfortable for you. But there isn't much to do. Okay, I see a question that says, can you take a chart and show us exactly how to plot? John, good, very good. Let's take this Aussie yen. Let me get rid of all of this. All right, so what I do, you look at the chart, you zoom out, and you see if there are any visible levels of confluence. They can be horizontal, as we said before, diagonal, swing levels, or zones, or whatever. What we're going to do, just for this sake, we're going to go with swing levels and zones. And what we're going to do here is I see a level here that has been initiated and confirmed. All right. I see another level here. And if I zoom in a little bit, we can make this into a zone. So we have a nice little support zone right there, which could also serve as resistance. I see a couple of more levels up here. We got one initiation there. Test, test. We broke through there. We'll just start with that. So when we come into what's happening now, you can see how those past levels look as we go into what's happening currently. We had this level here, which was previous support. We got a nice run up from there. We came back down, didn't quite test it, but we had some exhaustion here. We had a nice move up. We pulled back and we got some more exhaustion before we took off. We arranged for a bit, came back down to this exact level, tested it and rejected it. Pulled back and then came up again, tested and rejected, came back up before we broke down and closed completely below it. After we got this long move here, you can see price came up into this area here where we flirted around with it a bit, came back down and back up and back down and back up before we broke up against it. And now we're sitting here in this zone. You remember this zone back here? Nice support zone there, which is now serving as current resistance. So we'll just wait and see how price reacts around that level. We could take you to another chart. Let's go to this pound yen. We haven't worked on this yet. We'll zoom all the way out. You can see this is in a nice uptrend. So what I want to do is take maybe this area here, which is the most current, and look for support and resistance right there. We have a level here, of resistance, where it was initiated, tested and rejected, reversed, came back. We didn't get quite back up there again, but what I would do on this is, because price was so consistent around this area, would put another one here because we did get a test there before we rolled over. We have a previous swing low here. And what would you know right now? That we just rejected that level again. So it's pretty straightforward. It's pretty straightforward. If you want to, let me make this a little bit bigger. Let's just say you want to concentrate on the last month or so. You have your level here. We have a nice bearish engulfing pattern there. Rolled over, came back up, tested and rejected. Back up, tested and rejected, rolled over again. So it's pretty consistent. We have this area here, which is also could be used. We can make a nice little zone here because we have after this fall, we have a pullback area. We pulled back into here, rolled over, came back up, and then back down. So now we have some new support, and we actually have a zone right there. And look at current price. So many ways to do it. I hope this is helping. Please let me know. We can do one more chart. Let's see what else I have over here. Let's do this pound dollar. Currently, we have a resistance area here. Zoom out. See what's going on. Interesting. Nice level there. Nice level there. Do you see how these levels line up? Support and resistance rarely changes. As you can see, these are all daily charts, so we're going back a ways, and this support and resistance is still valid even today. So we still have around here where I had my previous support level. You see how we have this area is support right here. This range is big area here as support and resistance. Okay. We can go back. There we go. Here, let's see if we can find some more. This would be a nice resistance level to where if we did get a rally, I would be looking for this area to stop price a bit. Right there. Nice little resistance zone. Good, what? 300 pips, 350 pips or so. So support and resistance is pretty straightforward. I basically look for swing levels to either spot a level or a zone. And that's just what I do. I don't mess around too much with diagonal lines because diagonal lines, you can plot them anywhere to fit. They will all, you can always make a diagonal fit. That's why I don't like it. Price tends to react and be more genuine towards swing levels and zones, and even the static horizontal levels as well, which I prefer over diagonal lines. Another thing that really works also are whole numbers. I don't use them, but I can definitely show you some examples of whole numbers. Here we have the 152 handle, the 153 handle, 154 handle, and you see how price is still reacting with those levels as well. So I don't find them to be as effective, but they do work when you get specific environments going on. That's pretty much it. I mean, any questions? Anything else I can show you guys, or anything else you'd like to know about how to plot, why I plot them at certain levels, or anything? Just go ahead and send your questions in the box and let me know. Cameron, you still there?
Yeah, sure am.
Okay. Anything else? Anything going on in the chat room?
Does anyone else have any questions?
Was this useful? Is what I should ask.
Can you just go back to, you had a chart up there, Keith, that
Yep. Which chart?
I can't remember which chart it was. Might have been XAU.
Gold.
No.
Let's see. We have this one. I didn't do that. I did this one.
Yeah, I think it was this one. Go back.
Okay.
It's a euro, or was it GBP?
No, this is pound yen.
Yeah, okay.
Yeah.
So on this particular chart, would you look at the that's on the daily? Would you? How would you work out what direction you were going to look for, or would you just be, I guess, looking for the overall flow of what the daily is doing? So would you look at this and think, okay, well, the overall trend is up,
Right.
but would you be looking at the candlesticks on that particular one and thinking, well, that's the candlesticks there for me would be telling me, okay, well, it's kind of like a, like a piercing pattern, or what do they call it? A pin bar or whatever.
Right.
Would you be looking at that
Star,
thinking?
yeah.
Would you be thinking, oh, okay, well, I'm going to go possibly short on this one, or are you going to hedge your bet and look for a long play as well as a short play?
As far as this setup here, when I see this nice down move here, even though the bigger trend is up, I see this strong down move here, small retracement, and another strong down move. So as it's coming back up, I'm definitely looking for another down move, even though the general trend is up.
Yeah.
Because this move was so strong, and when we retraced, we barely got, what, 50% of that move? If we took a fib, it'd probably be, what, 50%? Let's take one of these. I never use my fib tool. Yeah, I mean, what, 50% exactly? So, I mean, yeah, I would definitely, because of this down move and retracement, I would be expecting another down move close to this area. if not all the way down here. And we did move pretty much all the way down.
Okay.
So bias. I'm not a trend trader or a range trader. I trade strictly support and resistance. So
Okay.
whatever the candles and price tells me, according to a specific level, that's how I trade it. If there's at least a 1 to 2 opportunity, then it's worth a shot.
All right. So in this instance, you've got, depending on what your risk position is going to be, I mean, ultimately, would you enter? It's price is currently outside of that zone.
Right.
If it closes outside of that zone,
Mm-hmm.
say below the the lowest pin bar where it is right now.
Right here? Or here?
Yeah, there.
Okay.
Would that be,
here, yeah, I'd be looking. At
yeah.
the moment, this would be a nice sell for me.
Okay.
Let's go. We can also scale down to like a 6 hour or a 4 hour. Yeah, even here too. I mean, bearish engulfing. We still didn't make it up as high. We didn't make a new high. Even let's go down to 4 hour. Same thing. We got this nice move. Little bodies going up here with the wicks at the top, and then we get another move down. Yeah, I definitely try to sell this. It wouldn't be a long-term sell, obviously. I'd be looking to come down somewhere around here.
All right. And would you be putting your stop loss in around that 185 mark?
Right, just above the pattern. Just above
Okay.
the pattern.
All right. I know Mike has a question for you.
Mike. Okay, when I draw SR, I seem to see too many swings. Whole numbers, half numbers, all types. I get a mess, yeah. That happened to me too when I was first getting a hold of the support resistance. What you want to do is find what's most relevant. Like I said, consistency will always help. Find one way, whether it's whole numbers or static swing levels, and just start with that. Here we go here. We have a swing level here. So what I would do is I would wait for price to come up here and validate it. We also have this one here. And daily charts probably wouldn't be the best way to do this. You probably want to scale down to maybe 4 hours so you can get better opportunities, because daily charts would take a long time. But yeah, pretty much you have a swing here, swing high, swing low. You have 2 levels that you're looking to enter. That's pretty much it. Let's go to this Euro USD we have right here. Swing level. Wait for price. If it comes and test it and reject it, you have you an entry. If not, wait for another opportunity or find another pair. So yeah, when you're looking at different support resistance levels, it's generally going to get messy. Choose one first and get comfortable with that. Get used to it. Be able to spot it on any chart, on any time frame. Know if it's worth taking, if it's not worth taking, and why. And you should be fine. Start from there. One type and just work with it. When you get comfortable with that, then you can add another one. That's what I did, and it seems to be working very well so far. So I have no complaints. I hope that answers your question a bit, Mike.
I mean, how I do it is I do the full length line.
Okay.
So
you do the static support resistance.
Yeah.
So you would be, for example, this would be a level for you.
Yep.
Yeah. Tweak it a bit and get it. Yeah. So I mean, you have there like another level here. I started off doing this actually, and it did work as well. But I did get a lot of confusion when you would get times where prices would come and then it would be closed, and then you have a lot of price action in a huge range around the level. That messed me up a lot. That's why I tend to stick towards the swing levels, because I can see if it's clear, if it's valid or it's not valid. But yeah, I did start with static support and resistance, and from time to time I still do use it.
Okay. I know I've just got another question through. Let me just see what that is for you.
Okay.
So I think it's Mike again.
Okay.
I think we just need to clarify for him a
Yeah,
bit.
I see. So many ways to draw it. I seem to not find one that I can use correctly. The only thing I can say to that is, man, which ones do you tend to use most? The horizontal line or the swing diagonal? Because, like I said before, and Cameron prefers the static support. I prefer the swing because the reason I prefer a swing is this right here. We have a swing high here. I mark my level before the end of this is made. By the time we get to this candle, we have a nice rejection. We come back down, we come back up, we get another rejection, and this would actually be a selling signal for me. But as price continued to go, we still rejected that level and then we rolled over. This is the reason I use swing support, and most of the time it tends to work out like this. And if you do get a close above, then it's generally an invalidation of the level. Not always, but generally an invalidation of the level. And I find that it's the most clear when I'm looking for position to take.
Do you just out of curiosity, Keith,
Yep.
do you start looking at your levels on the higher time frames of the daily or even monthly, and then do you confirm an entry point lower, like on a
Right.
lower candle?
I also do that. If I'm looking for a longer position, a longer term position, then I will start on a weekly. So I would look for levels on the weekly, which we have here. We have another here, and then we have a little zone we can make with this level and this level right there. So this is what I look for on the weekly. I scale down to the daily, look at price action towards these levels. You see it pretty much respected, and I'd look for an entry either on the 6 hour or the 4 hour. So as you can see, we had a nice entry here. Here we had a false breakout, came up, but this candle right here, you scale down to the 4 hour time frame, it also it makes moves like this on the weekly much clearer. But even though this is a good signal on the weekly. On the daily, you see how we got this nice move up, false breakout, came right back down. But on the 4 hour, you would have been able to take advantage of the move. Because you got a nice signal there. Nice signal here. This candle, we came back up, and then we slowly came back down, back up, and then this candle right here would have told the story, and that would have been it.
So Chuck uses swings, whole numbers, trend lines, MAs, zones on several time frames.
Okay, oh, this is Mike again.
Oh, is it? Sorry, Mike.
Yeah. How do you start out, Mike? Do you just look at specific charts, or do you do top-down analysis from higher to lower time frames, or you're just a one time frame guy where you'll trade the 4 hour or something and just look for levels there? Because that's you have to have some type of order. Yeah, let me get. If you just go on to, you have a 4 hour here. You just go and plot the levels on the 4 hour. We get a level broken, and we don't stop there, but we stop at a different level because there was another level on a higher time frame that you missed. That was one drawdown from just trading one time frame. I also learned that because for a while I used to only trade the 4 hour or only trade the 2 hour or something like that. You miss a lot of levels. I found the best way is to do, like Cameron was saying, top down. Not necessarily from the weekly. You could start from the daily, go down to a 6 or a 4 hour, and then try to look for an entry on an hour or a 30-minute time frame. Okay, I just kind of guessed. I just kind of guessed a lot. No rules, no system. That's the problem. That's the problem. You need some type of way. So what my advice would be to you, choose one type of support and resistance and just stick with it. Or back test it and see how probable it is. See if it's worth even putting your money on the line for. Because if you don't have any rules or plan or anything, you might as well go to the casino. Not really much else to be said. Not trying to be too harsh or anything, but it's very necessary to have some type of plan and to stick to it.
I think, Keith, what we'll probably need to do is do another session where we actually, pinpoint how you specifically get started on your charts. So
right. That would be
starting with a
perfect.
blank canvas, we can, kind of look at, you just take one pair, for example, and say it's the Euro USD. Just look at it and say, okay, this is how I start. I start with a weekly, and I look at pinpoint all the levels that are interesting to me, and then go down to a daily, and then maybe you can let everyone know how you kind of from there choose whether or not it's something that keeps you interested, or whether you're just going to discard this as a bit of noise or whatever, just to give people a bit of a because I know Mike, for example, sounds like he's kind of going to end up with a whole heap of stuff on his charts and be no clearer on which direction or whether or not it's a trade that he wants to take.
Right.
So maybe that's something that we can follow up in a week or so.
Yeah, we can definitely do that. I see another comment Mike made. I've been trading for about 14 years and losing consistently. Just can't seem to find one that I can do correctly. Yeah, I can say the biggest part of that is not having some type of plan or some type of organization. To just be plotting levels willy-nilly, it won't work. It won't work. Yeah, I would definitely love to come back and do that, Cameron, definitely. And hopefully, Mike, you'll be able to attend there too, and maybe from there we can get you onto some type of plan or something, some type of rule.
All right, cool. Well, Keith, thanks very much for coming in. If there's no other questions or anything that people have.
Yeah, thanks for having me for the first time. I'm kind of nervous, so I hope it
No,
didn't
no worries. I've got to say the so far classic call of the evening has to be Mike. I just kind of guess a lot.
Right. Right. Yeah, that's Mike. You got to get some type of plan. Some type of plan. Choose one type of support and resistance. If that's what you're planning to trade, if you're interested in support and resistance, choose one type and get to know it. Analyze charts, plot them on different charts, different time frames. Do the top-down analysis, weekly, daily, 4-hour, or daily 4-hour, 30-minute. Whichever you feel comfortable with, whichever works best with your schedule. But no plan, no money. It's very difficult to become consistently profitable without a plan. I've tried it and failed, just like most traders, I'm sure. He wrote something else. Let's see. A couple of things, actually. What about the trade on, I don't know what that is, breakout levels, lower lows, lower highs, higher highs. You're using the daily candle support resistance. For me, I'm not a big breakout trader. So yeah, I failed in that department all the time. Yes, I've taken dozens of courses for thousands of dollars and just failed to do them correctly. How long do you stick with it before you don't use it anymore? I guess that would be another question to ask.
It's it's funny you say that. I was chatting with, and I don't want to sound like I'm name dropping, but I was, for the magazine itself, I was chatting with Rob Booker, and most people know Rob from Traders Podcast.
Right.
The way he explained it, and it's coming out in another edition of the magazine a couple months time, but he had some really classic points when it came to becoming successful at trading, and it's really all about starting at the bare bones. So you start with a blank canvas,
Right.
And you don't add too much to it. You just you've got to work out a way that you just either simply put horizontal lines in for your support and resistance of areas where price has hit before and rejected or broken through or whatever. Plot those out and then just see what price does when it gets to that point.
Exactly.
I think, just, I guess, try and keep it as simple as possible, more overcomplicated, just keep pounding away at it. And the trick is, as he says, is all about not losing money. So it's all about protecting your capital, knowing your risk reward. So
exactly.
And if the trade doesn't work out in your favor, then you've got no reason to be in it. Just get out of it. So you put your support and resistance line in, price gets to it, prints a candlestick pattern that tells you that price is more than likely going to go down.
Right.
Place your trade, and if it goes up, you get out.
Exactly.
If it goes down, you ride it.
So, exactly. Pretty simple.
I mean, yeah, it sounds simple, but it's not. We all know it's not. But anyway, look, we might leave it there.
Okay.
Just for now.
Right. I see a couple more, and then, but no questions, just comments. Eric says.
Yeah, exactly, Eric.
Let your profits run. Yes.
Exactly.
And Mike said sometimes for 6 months. He's in one now for about 6 months, some weeks. Yeah, 6 months is a long time. It's not working. Yeah, it's not working. You need to find something more personalized to you and your trading. It seems like you're doing what everyone else says works for them, and it's not working for you. You need to find something that's more accustomed to you.
Yeah, Mike. I don't want to cut you off or anything, but look, I think what you should do is hook up with Keith on Twitter. So it's, what is it, at El Gitano 1720?
5720.
5720. So
5720. ELGITANO 5720. Yep, Cameron, go ahead.
Yeah. So yeah. So if you go back up to the top of the chat box, I think it's actually up there. So I know Mike's saying that he's 6 months in a class, not a trade. So man, 6 months trade would be a long time. But anyway, so we might leave it there. What we're going to do is I'm just going to take a note of those guys that are left in the webinar, and what we're going to do is send you out a candlestick pattern cheat sheet, which we had created especially for Keith's presentation. So this was Keith's first one with us. There's going to be plenty more, and we're really going to drill down on it, Keith. So you're going to have to bear with us, but we're going to really drill down into exactly how you trade.
Good.
All right.
Chart and let's get to work.
No worries. Look, just want to thank everyone that's been in there. I'll send you an email. As I said earlier in the presentation, the new magazine is coming out in a few days. I'll get you all a free copy. It's actually got Keith's interview in there, where he runs through, what it takes, or where he's come from, and what it takes to be successful in trading. And then, if you've got any comments, you can definitely connect with either Keith or myself. Probably the easiest way to connect with us is either through Keith's website, which is FX Brick Road, or you can connect through the magazine. But look, the easiest way is just on Twitter. Send us a message, or as I said earlier, I love Instagram. So it's got some good educational, motivational, etc. pieces on there. So just hook us up, and I'll get you a magazine and another little gift coming your way in your email. So stay tuned, and if not, I'll catch you on the next one. Thanks very much, Keith.
Hey, before we go, Max, no, I don't use Fibonacci. Strictly swing, support, resistance, and zones. And Mike, yes, you need to get to me on Twitter. You completed Steve Nissen and you're still having a problem? Get at me on Twitter. We can talk.
All right, cool. All right, people, thank you very much. We're going to leave it there, and we will chat soon.
All right. Thank you. I appreciate it.
No worries. Thank you.